Saturday, February 15th, 07:54 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. This Monday, U.S. stock market is closed. It's a federal holiday. The futures market have reduced hours of trading. Situation awareness. I just posted this morning on a Patreon page, U.S. economic events scheduled this week. So you're more in the know of what's getting ahead of us. The bigger picture is next month, the month of March, the Federal Reserve has a scheduled date to meet. I posted that in the past on Patreon. And one of the big problems is the United States legislative and executive branches have us right now scheduled to shut down because they haven't worked out a financial plan to continue past 3 months of the budget. So that is hanging over us. And the last one they did was this past January, again, short term, just to kick it down the road. Same leadership in the United States legislative branch that's been there for over 2 years, did this over the last 2 years. That hurts a lot of financial institutions that want to help out small businesses and big businesses of the uncertainty. We're also still in the first quarter of the year. We're in the second month of the first quarter, the middle of the first quarter. Majority of the big company earnings have came past us already. We still have the regular sessions of people long-term investing, dollar cost averaging. Just a little insight again. I highly recommend consider to focus on good stock indexes, good stock ETFs for your long-term investments if you're going to be invested in the equity market, not the single stocks. So again, many people in the United States participate in dollar cost average through their employee, buying mutual funds, paying additional fees, taking adult responsibility, and buying better financial assets with lower fees. Many of them do contributions, automatic withdrawals monthly, some the first week, some the middle of the month, and some the last week of the month. That means the institutions that they invest through have mandates that they need to put a certain percentage of that capital into the stock market. So that gives a short-term boost of new cash flow going in the stock market. First, we're going to look at the equity indexes top down. 3 grids. The far right would be the monthly, the middle would be the weekly, and the grid on the far left would be the daily. First would be the S&P 500 cash index. Cash index trades from 9:30 a.m. to 4 p.m. New York time. It has also options on it. It also has a stock ETF. Stock ETF is SPY. The far right. See the candle on the top far right? It's the yellow candle. That means we didn't take out the high or low of the prior month. Yep, we're still inside the range of last month. Last month was the all-time high. Be aware of that. You're going to compare this. I'm going to compare this with the other indexes. The middle grid, well, the weekly. Green, higher high, higher low than the prior week. Still inside the range of this year. We haven't made a new high yet. That was several weeks ago. Tight consolidation, building energy here. Daily chart on the far left. Red candle. Did make a higher high, higher low than the prior day. But look how small that Friday candle is. Little tiny candle. That's a dodgy candle. Small little body. Big wick on the top, big wick on the bottom. Dodgy candle. Dodgy candle means one of two things, depending on the position, if it is in a trend. means either halfway point or reversal signal. Well, we have this red candle on the far top left. That's the all-time high for this year on the S&P 500. Smaller trading range of that red, and then it sold off. I shared with my Patreon members yesterday, Friday, a trade idea. I took a bearish position. So I'm in a current bearish position with options, looking for price to decline sometime next week. As well, I'll be closing that position, either win or lose, sometime next week before expiration Friday. And I also shared earlier the week another trade idea. It was a bullish trade idea back here at this green candle with options that expired this past week. That was a winning position. Position was anywhere from 1 to 2 days opportunity. If you stayed in till most of yesterday, you would have had bigger gains. The price to get in that position for the smaller size position was between $17 and $18. And Friday, the value of it was $76 plus dollars. Yep. If you closed earlier, the day before, you still had 60 something dollars. Either way, it was a winner. And we'll see how this next one turns out next week. Big gap down here has not been filled yet. So that's the S&P 500 stock index. Multiple time frames. US S&P 500 has multiple stock indexes inside of it. And I'm going to go over those stock indexes. Majority of them I'll show you that are inside of it. Very diversified stock index. A lot of history. And of course, we know it's been adjusted quite a bit last year. So now we're going to the NASDAQ 100 stock index. This is not the NASDAQ composite. This is the NASDAQ 100, the 100 largest valued companies in the NASDAQ composite. Two different indexes. This is the NASDAQ 100, which is part of the S&P 500. Look at the grid on the far right, the monthly. New high. New high for the year, new all-time high. Outstanding. The grid in the middle, the weekly candle. Higher high, higher low. Breaking above that high of last year, yellow horizontal line. So I'll remove this. And I'm going to move this current yellow line that made up this year to the new high. Check. Left the number out. Full house maintenance. There we go. And the grid to the left, same thing. Higher high, higher low. Make sure it's adjusted up there. So this is the stronger index, which again is inside the S&P 500. This index is mostly high-tech companies. On to the next index. One of the older stock indexes, one of the oldest stock indexes, the Dow Jones Industrial Average. Look at the grid to the far right. Also, yellow candle, inside candle, hasn't taken out the high or low of last month. It's also below the high of last year. Middle grid, weekly. Also inside candle. So the past 3 weeks, lower highs. Big wicks, possible distribution occurring here. And here's a low this year. So we haven't taken out the high of last year neither. And the daily chart. A lot of chop over here, but lower highs. Building a wedge too with these highs here, the bottoms. And the gap down here has not got filled yet. So this is also part of the S&P 500 stock index. And many of the companies in the NASDAQ 100, the big ones, I stand corrected, not many. Many of the A few of the big ones are inside this index too. Now to the Dow transports. Just like it says, is an index of transport companies. Look at the monthlies on the far right. We're also below the high of 2021, below the high of 2024. So this is not leadership. In the past 2 months, look at these yellow candles. Yellow candles. We haven't taken out the high or the low of last month and that prior month, January, also inside that range of that huge sell-off in December of last year. Middle grid, weekly. Mixed singles here. Look at these big wicks and these two red candles after that huge decline of last year. And daily chart. Yeah, close higher Friday. Not impressive. On to the next, the Dow Utilities. Stock index, utilities. Many of these companies have larger dividends paying than many other companies. A lot of people buy those stocks that have high dividends for defensive reasons. Some think the growth is slowing down. Some prefer to own these stocks that have potential income and value compared to other fixed income assets like bonds, notes, CDs. Well, for the current situation, look at the grid on the far right. Below the high of last year, and inside candle on a small trading range right now. Very tiny candle. We can see a potential reversal here. If panic starts selling, or if people think the economy and stock market is going to slow down, we might see a surge in buying of here. Weekly chart, middle grid, green, higher high, higher low, huge wicks on top. Again, looking terrible here, bad shape. And daily chart, Friday, sell off. Well, also I could say this too. On a situation, if there was panic selling, it could spread to this stock index too. For the last index, this index, RUT, aka Russell 2000, is not part of the S&P 500. Has 2,000 companies in the stock index. It's smaller companies in value. Look at the grid on the far right, the monthly, below the high of last year. And look how small the trading range is. Very small, green candle there. They make a higher high, higher low than last month, but again, small trading range. Weekly chart, the grid in the middle, inside candle. No surprise, a lot of inside candles, a lot of indecision. And the grid on the far right. The gap has not been filled yet. A lot of chop over here. So put this back on the higher time frame. Show you the monthly. Each of these are a month. Zoom in so you can see some better. Top left, S&P 500. The middle, the NASDAQ 100. And the top right, the Dow Jones Industrial Average. Bottom left, Dow Transports. Bottom center, Dow Utilities. Bottom right, Russell 2000. Looking at these, I see the top three focus on. The top two, top left, are more trending. The one on the top right is more of consolidation. And the bottom ones are not trending to the upside. No. So again, they are not all trading the same way. There's a divergency. We only have one of them made an all-time high. And I showed in my video early this past week of the 7 significant stocks, which are part of the NASDAQ 100, how they are performing. Some of them made new all-time highs, and some of them are underperforming. So again, the situation here is majority of companies are not performing the same. Very few are making new highs, and not a lot of good ones are trending in our way. Opportunities to sit on hands, wait for good values to be pulled back, to be investing in good companies, good stock indexes. Patience. I focus on the good company, the good stock index, you go ahead and consider that other financial instruments. I rather have ones that are proven and diversified, but have good history. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.